Hey there, this is Joe Diasana, hashtag Howdy from Houston, hashtag The Property Joes, and I am bringing some excellent information on how to buy a house. This topic today is going to be around credit score. Why is that important and how to reduce it and some interesting facts around it. So I got to be real careful. I'm on this desk that moves, or it's standing desk. It doesn't move. Very sensitive. I toe tap, so hopefully you guys are not nauseous. So, credit score, regardless of age, credit score impacts your monthly payment. However, there's one more thing that impacts it even further. So, if you put more money down, for example, on a $300,000 house, the average in Houston right now is $315,000. On a $300,000 house, if I put 20% down at $60,000, your loan balance is $2,400, and depending upon where you live, it's roughly about $2,000 a month. Your credit score can make that $2,000 a month, what most people can get. It could go higher because of your credit score or lower because of your credit score. It's inversely proportionate. So if you have bad credit, so great credit's around 700. If you have great credit, like 750, then your monthly payment may be lower in that example. If you have bad credit, then the banks look at you at higher risk, so they're going to charge you a little bit more on your interest rate because of your credit score. So it's kind of a puzzle, and it's super absolutely important that you get with an excellent lender who can explain step by step and how one lever pushes the other, right? But as you get into that, sometimes it gets a little overwhelming because there's a lot of terms that you're not used to because it's not what you do every day. I get it. As you step back, number one is, how do I keep my overall payment lower? That's two things. Credit score is secondary to how much money you put down. So more money put down, the better. And then the variation in credit monthly payment comes based on your credit score. So in that example we gave earlier, the other piece that can affect your overall monthly payment is where you pick, because location can change your monthly payment. How does that do that? So in Houston, the property tax rate is super low. It's less than 3%. And most places you don't need flood insurance and you don't need windstorm insurance. But if you go down to the southeast in Brazoria and Galveston County, like Pearland or Friendswood, you have to buy windstorm insurance because the hurricane comes and can blow it down, and you've got to get hurricane rated built homes so it can withstand the wind, right? So that may be another $100 or $200 or $300 more per month on your monthly payment. It has nothing to do with your mortgage. If you go to Katy, you may get into a higher tax bracket because it's a new subdivision, and it has higher HOA. So all those figures depend: location, how much money you put down, and credit score. So interesting information. The average credit score by generation. Okay, so let's go do millennials first. The average credit score for millennials, which were born 1982 to 1995, is 634. Generation Z is 631, so 1996 and later. And then the baby boomer generation, everybody talks about them, is 700, and they're between 1947 and 1966. And Gen X is 655. So millennials are 634, baby boomers are 700. So interesting information. If you want some more information about that, get with me, direct message me, or hit me up with the information down below, and I'll be glad to help. All right, that's 5 minutes. I don't want to do any more than that because it gets really detailed, and I appreciate you guys, and I'm out. Ciao.